morning, girls.
Nagamani ma'am. Vidya.
Yes, ma'am. Good morning, ma'am. Vidya, ma'am.
Good morning, ma'am. Ma'am, I have given the YouTube link in the chat box.
Okay,
You
ma'am.
can pass it on to your students.
Yes.
1 second.
Ma'am, when we start the webinar, at that time, this link has to be shared, or now we can share it?
No, you can share now, madam. You can share now.
Okay,
Sir has
ma'am.
joined.
No, ma'am, not yet. I'm waiting for the sir only.
Yeah, I've shared the YouTube link. You can pass it on to your students. They can just connect it. It would be ready.
Okay, ma'am.
The moment sir comes, you can start it, madam. All set from this side.
Yes. Thank you,
Okay.
ma'am.
Okay. Yeah.
మ్యామ్ ఒకసారి అది క్లిక్ చేయరా మేడం యూట్యూబ్ లింక్ అన్నారు అది నాకు కావట్లేదు ఇది మ్యామ్ యూట్యూబ్ లింక్ వాట్సాప్ లో పంపించారు చూడండి నాకు ఇది అవ్వట్లేదు
నేను జూమ్ లింక్
విద్యా మ్యామ్
Yeah, ma'am.
Ma'am, when I'm copying the YouTube link, for me it is getting copied that Zoom link, ma'am.
Ma'am, I've given in chat box. I'll send it again. See, otherwise you can see it in the Zoom itself. Can you see live YouTube? On the top, there itself you can copy streaming link.
Where, ma'am?
On the top, can you see live, madam? Can you see live in your screen?
No. I'm not
live
able
red color button.
Yes, ma'am. Live I'm able to see.
When you click that, can you see copy streaming link?
Yes, ma'am.
Yeah, you can copy that and you can give it to your students.
Thank you, ma'am.
Okay, ma'am.
పిల్లలు యూట్యూబ్ లో జాయిన్ అవ్వచ్చా
మ్యామ్ నేను మీకు పంపిస్తాను
నేను జాయిన్ కాలేదు ఇంకా
మరి పిచ్చిగా వచ్చింది
కాపీ చేయాలనా ఫార్వర్డ్ చేస్తుంది
ఫార్వర్డ్
యూట్యూబ్ కి కాలేదు పంపించండి ఇందులో పెట్టేసాను లింక్ కాపీ అని వస్తుంది అయితే మనం ఏం చేయాలి లింక్ కాపీ అంటే మామూలు ఫార్వర్డ్
సార్ ఇంకా జాయిన్ కాలేదు కదా తల్లి
ఇప్పుడు కాల్ చేశారు మ్యామ్ సార్ లింక్ కోసం అని నేను కాల్ వస్తుంది సార్ నేను అప్పుడే లింక్ ఫార్వర్డ్ చేశాను ఓకే ఫైన్ అని పెట్టాను మ్యామ్
మీకు ఇద్దరు ఫార్వర్డ్ చేశాను మా స్టూడెంట్స్ ఫార్వర్డ్ చేయండి
ఓన్లీ యూట్యూబ్ అన్నారు
యూట్యూబ్
చేసేసాను జాయిన్ అని అంటున్నాను నేను
జాయిన్ అవ్వండి కావాలంటే మీరు సరే మళ్ళీ ఇట్స్ ఓకే మరి నేను అయిపోయాక
సార్ జాయిన్ అయ్యారు
గుడ్ మార్నింగ్ సార్
యా గుడ్ మార్నింగ్ అండి హాయ్ బాగున్నారా
బాగున్నాం సార్
గుడ్ మార్నింగ్ సార్
యా గుడ్ మార్నింగ్ ఎవ్రీబడి గుడ్ మార్నింగ్ అండి సుగుణ గారు నమస్తే What is that?
ఓపెన్ సామ్సంగ్ లేకపోతే నేను అడుగుతున్నాను యూట్యూబ్ అని పెట్టేసాను ఓపెన్ యూట్యూబ్ అన్న
Good morning, one and all. Good morning, one and all. I, Nagamani, on behalf of Department of Commerce, Kasturba Gandhi Degree and PG College for Women, welcome you all for today's webinar on Introduction to Income Tax. I welcome our speaker, Mr. C.A. Sharath Pawan, Associate Chartered Accountant for today's webinar. Sir, I thank you for accepting our invitation and enlightening us, going to enlighten our students regarding the basic concept of income tax, sir.
Thank you, Andy. Same to you. Thanks for giving opportunity.
It's our pleasure, sir. And I request Mrs. Subna, Assistant Professor from Department of Commerce, to give the introduction to introduce our speaker for today.
Good morning, sir. Good morning, everyone. It's a great pleasure for me to introduce our today's speaker, who is going to deliver a lecture on Introduction to Income Tax. The speaker for today is Mr. Sharath Pawan. His qualification is BCom and Associate Chartered Accountant. Mr. Sharath Pawan is a graduate and associate member of Institute of Chartered Accountants of India, within 2 years of experience in practicing the profession, with in-depth knowledge, understanding, and vast experience of Indian financial and taxation environment, along with its practices, regulations, and complexities of Indian financial and taxation system. He is also dealing with diverse client profile. Presently, he is managing partner in NCV and Associates of Hyderabad, and also proprietor of Sharath Pawan and Company in Chevella. He is an expertise in subject matter areas like tax audits, domestic tax planning and consultancy, GST audits, incorporation of companies, and LLP and project financing. I am glad to invite the today's speaker, Mr. Sharath Pawan. I would like to hand over the session to sir. Thank you. Sir, can you please start the session?
Yes, madam. I would like to share the screen.
Yes.
Yes, sir, I'll make you the host, sir.
Okay.
Sir, you can share the screen. The access is already given to you.
Okay. Okay, students. Today we are going to learn about income tax. So before learning about income tax, I need all of you to understand why the income tax is bought in India or anywhere in the world. If in India it is called income tax. In other countries also, it may be called by other name or word income tax, but basically the concept of why it is bought will be the same. If you see, For example, I want you to imagine an scenario, just like how you see in movies. I want you to imagine a scenario like there is an island. For example, just imagine there is an island. On that island, there are 1 lakh people living. That 1 lakh people, they are doing their daily businesses, earning income, and they're doing good. Suddenly, what happened? One day, some thieves from out of that island came and robbed some people's gold and everything. So what they all have decided is to appoint 100 members as security guards for that island and to check that no one is coming and robbing their homes. So to that 100 people, they need to pay some amount as salary. Who should give that amount? So what all these people decided is that they will all contribute some amount and pay these people salaries and protect their own island. So that is one thing. And next, these people are daily they are doing businesses and all. To travel from one place to other place, there were no proper roads and all. So they thought to decide to make roads, construct roads and everything. For that also money is required. Who will give the money? So all these people have pulled some amount and constructed roads. So for like this, for the all the people togetherness, for their welfareness, some activities like this roads, security, and other general public welfare activities, amount is needed. And that after pulling the amount, someone needs to manage that amount and do the works. That is nothing but government. So what this 1 lakh people did is they have appointed some 100 members. That 100 members are responsible for taking care of that 1 lakh members, and they are responsible for constructing roads. They're responsible to take care if any accident happens and if any robberies or any kind of insecurity to that island. These people, 100 people need to take care. These 100 people are nothing but the government, which you see now in state or center. The governments, what do? They just take the money from public and they do service to the public. What are those services? If you see, the general services which are provided by government will be healthcare services. Healthcare to whom? The public, and especially the poor people, for which government hospitals are set up. Then next, providing education. Education to all the people and especially to the poor. Providing the basic subsidies on the minimum necessities for the people like cooking gas, fertilizers and all. Then salary and pension to government employees, national security and infrastructure. For all these activities and many more other activities, money is needed. From where will the money government get? The government will get the money from the public in the form of taxes. So they will collect taxes from the public and they will provide, in return, they will provide services. In that taxes, basically there are 2 types. One is direct tax, another one is indirect tax. Direct tax. Why it is called direct tax? It is called direct tax because it is directly levied on the income of the public. How much is your income? For example, your income is 10 rupees. Give me or pay me tax 2 rupees. For example, your income is 100 rupees. Pay me 10 rupees. So it will be based on income. How much you are earning, on that give me some amount. So directly on the income, it is levied. That's why it is called income tax. There is other type of taxation, which is indirect tax. Indirect tax, presently, it is GST, goods and service tax. GST is not levied on income. It is levied directly on the goods or services. For example, a person is selling 1 lakh rupees goods to other person. A is selling to be 1 lakh rupees goods. On that 1 lakh, extra 18%. The general rate which we see outside is 18%. So 1 lakh plus 18%, 1 lakh 18,000 is to be collected. That comes under GST. Today, now we are going to discuss income tax. Income tax is directly on the income. What is income? If we see, what is income? Income is the amount left to us after all our expenses. Unlike GST, it is not directly on the sale value or purchase value. It is on the amount left with us after all the expenses, after meeting all the expenses. For business people, like if you can see on the roadside companies, everybody who are doing business, generally their sales will be called revenue, how much income they are receiving from their customers, and minus expenses. they'll be having lot of expenses like purchases, their salaries, rent, everything. After removing expenses from the revenue, the balance is profit. So income tax is collected on this profit, the amount which is left over with them, not on the revenue. On the amount which is left over with them, the tax is collected on profit. This is for business people who are doing businesses and all. Next, for salary type of people. For salary type people, unlike business people, they won't have any expenditure. Like, for example, if any person A is working in a company, he will receive salary amount and that he will spend for his personal purposes. He need not expend it on further salaries or purchases or anything. He's not doing business. So directly on the salary amount, it will be levied. Income tax is collected for salary people directly on the salary amount. But whereas for business people, it is on the profit. It is on the left out amount. So salaried people, who are these salaried people? Salaried people can be anybody. It can be an employee in MNC, or he can be a police, he can be a military, he can be a government employee, he can be a person working in a hospital, anybody, any type of occupation or nature of work he does. If he's earning income under salary, then on their salary tax is levied. Unlike business, business is on profit, but whereas salary, tax is on complete salary amount. Then third type is sale of property. You might have seen, like in your relatives or parents, if you sell some land or if you sell some flat, then tax is to be collected on that also in the under Income Tax Act. So that is third type of taxation in income tax. So how the tax will be collected on that is, for example, one of your relative bought a land for 10 lakh rupees last year. Today, he wants to sell it for 15 lakhs rupees. So on that balance 5 lakh, he will be paying the tax. That is called capital gain. So here income tax is on capital gain. So for business people, income tax is on profit. For salaried people, income tax is on salary. For capital gains, the tax is on capital gain. So that is the word that's why the word income tax. What does that mean? Tax on income. What is income? Income is for business profit, for salaried people salary, for capital gains, it is capital gain, sale minus purchase value. So that tax will be levied on income. Next, if we see history of income tax in India, how the income tax has began, like 100 years or 200 years, 300 years, when did it start? If we go to the history and see, the first usage of income tax, or the words can be different, but finally collecting tax from the public, it can be in rupees or it can be in goods also. Earlier, before this taxation system came and all, barter system was there. So for example, if a person is doing agriculture, he used to get agriculture produce. Another person is doing dresses stitching and all, he used to make dresses. So what this agriculture person used to do, he used to give, for example, some quantity of agriculture produce to him, and in return he used to take dresses from him. That barter system used to be there. This barter system was okay, but it was not having all the facilities until a common exchange of medium was invented. That common exchange of money is nothing but currency. In India, it is rupees. Like everything you can measure in rupees. Earlier, unlike in barter system, you need to give one item and take another item. But when the medium of currency came, many issues got solved. So after the currency has started, then this taxation point has started. If you see on our history, the first taxing the people on income has been started during the times of Brihu Maharshi and Chanakya. We can see in the textures like Manusmriti and Arthashastra. Arthashastra is written by Brihu Maharshi, Manusmriti is written by Chanakya. These two people, during their this was the ages of kings, when the kings were there. That time taxation was being implemented by them. These two scriptures not only contain taxation, they contain other legal administrative points also. They are like constitution for them. In that, taxation are also mentioned, income tax especially. So if we see Manusmriti, according to that, tax was on 1/5 of the profits. Just now we have seen in business, in the before slide we have seen, in business it is on income minus all the expenses, revenue minus all the expenses, turnover minus all the expenses. On the profit which will be there, on that income is levied. Here directly they were collecting 1/5 of their profits. Then agriculturists, they were used to pay 1/6 or 1/8, depending on the circumstances, based on the season. Artisans used to pay 1/5. So like this, during that times, taxation was levied in India in the history. Then after that, if we see when the British has come to India and ruled for almost 200 years, that time when they were there, they were also collecting taxes from the public. And that first time in the British reign, it was James Wilson who has started collecting taxes from the public. Subsequently, after that, Income Tax Act was passed in 1886, 1918. These two acts which were passed by the British were continuing. And India, after we got independence in 1947, in year 1962, we have passed Income Tax Act. This Income Tax Act is still in existence presently, which we are studying and which you will use in future also. It is Income Tax Act 1962. It is 1962, but many amendments were made to that. Every year in budget, if you see, compulsory there will be amendments to Income Tax Act, considering the present situations, some giving poor relief, some taxing, some more taxation, some relief to some industries based on the request that receive from the industry. So all those they will consider, and every year budget they will make. Even though the year is old, it is 1962, but the act is up to date only. There are no complete old provisions and all. The whatever the provisions are there, they are possibly practical to the present situations. So presently, Income Tax Act 1962 is running, and every year amendments to that are being made. So this is what I was saying, 1962 Act, and every year several amendments are being made to that. Then in income tax, if we see like basically how you be in college and all, normally the words regularly used in your college are like, for example, classroom, student, hostel, then auditorium. All these are the regular words which you use in a college atmosphere. Same like that in income tax also, there are some definitions which will be used regularly by everybody, like who are dealing in income tax. These definitions, which are almost the basic definitions, they will be used regularly by the income tax department or who are dealing in income tax consultants or chartered accountants. So these words, we need to understand these words first clearly. The first definition is assessee. If you see the word definition assessee, like this is just like the word student in your college. In a college, the people who are coming to learn something, they are called students. Same like, for example, who are going into the army, they are called militants. Same like that in income tax, the general public who are liable to pay tax, they are called assessee. Assessee is the word which is used for the customers of income tax department or the persons who pay income tax to the government. The word assessee, how it is defined in income tax, if you see, assessee is a person who pays tax. Voluntarily, he's paying tax. He's paying tax on his behalf. Tax or any sum of money. A person who pays tax or any sum of money under provisions of Income Tax Act. So every tax, voluntarily he's paying it, or any sum. The word he is using any sum. Why he is using any sum is because it can be other than tax, like interest, penalty, other things. So he's using any sum. This any sum means penalty, interest, late fees, all other things. Then, yeah. Any doubts? Shall I continue?
Yes, sir.
Yeah. So here he's used in first paragraph, if you see, he's saying who is paying voluntary, pays or any sum. Then second, if you see individual who is liable to pay tax, he did not pay tax, he escaped the tax. He's being silent. He did not file. He's not filing his IT. He's not paying tax. So he's liable. So the word assessee is the person. This is just like, for example, a student who today there is a class. He has one. There are, for example, 3 students whom we are talking about. One student has come to class. He came already. Second student, he's supposed to come, but he did not come. But he is also a student. Same like that. Assessee is a person who has paid the tax, or another person who is not paying the tax, who did not pay the tax, but he is supposed to pay the tax. So assessee is a person who is liable to pay tax or paid tax or any other sum of money under the Income Tax Act. That is the definition for assessee. If we see the second definition is deemed assessee. Why the word deemed assessee? Why the concept of deemed assessee is, for example, there is an assessee who needs to pay, for example, 10 lakhs to the government as income tax. But what he did, he was supposed to pay tomorrow tax. Is supposed to go to the bank and pay tax, or go to CA and pay tax. But suddenly today he has expired. He has died in a road accident. So since he's not there, someone on his behalf need to pay tax. So who is that someone? This is one situation. There might be other situations also. Some person, he may become, he may go into coma, or something might happen where he is not in a possible situation to speak to the officer or come and tell or come and pay tax. So all those categories, they are defined under deemed assessee. So in this deemed assessee, who are the persons mentioned is eldest son or daughter or legal heir of a deceased person without writing a will. Will means vilunama. For example, if a person is there who is writing will, all my assets will go to my son and daughter after my death, then the son and daughter will be responsible for paying his income tax also. A father is there, he did not write any will, suddenly he died. Then who will be responsible? Bole to eldest son, eldest daughter, or any legal heir is there. If son and daughter are not there, he has appointed some legal heir to look after his assets. He has formed a trust, for example. Then they are responsible for paying that tax. First deemed assessee. Second deemed assessee is guardian of a lunatic person or minor. Lunatic person who is always drunk. He is not able to reply to the officer's notices, not able to meet the officer, not able to deal his cases, income tax cases, or a minor. Minor also, there should be a guardian for the minor. Minor cannot directly enter into it. For example, there is a person is there who is 15 years of age. His parents are having some 100 acres of 100 crores of assets, and suddenly their parents have expired. So all that assets, everything will go to the minor. On that asset, some income is generating. He has kept some 1 crore in bank. Every year, some 6 lakh interest is coming. On that 6 lakh, he need to pay tax to the government. Since he is a minor, he don't know how to pay tax. All those things he doesn't know. So a guardian will be there for him. Should be there. If it is not there, he needs to appoint a guardian. That guardian is responsible for paying tax on that 6 lakh. So then next comes agent of NRI. NRI, these people who are leaving India and going to out of country for business or doing job. If they are having any income in India, for example, there is a person A, he is having a commercial building. Like, for example, we can take AMB Mall or Sharat City Capital Mall. These are there, no? For example, A is a person, he is the owner of Sharat City Capital Mall. Sharat City Capital Mall, from that, he will get every month almost 50 lakhs rental income. But A has gone to America and he is staying there. That rental income, which is he's receiving from that mall, is taxable to that A. But he's in US. How to tax him? What that Mr. A needs to do is, he needs to appoint an agent here. And he needs to tell the department, I'm appointing B as my agent. All the rent income which I receive from the mall, 50 lakhs per month, into 12. Yearly IT filing is yearly. So 50 lakhs into 12, 6 crore which I am receiving. On that tax is to be paid. Mr. B, my agent, will pay that tax. So please collect tax from him. He will write a letter to the department. So that agent is responsible for paying tax. Then comes an executor or legal heir of the deceased person. This is the first case which I told. Like a person is there who has written that all my assets will go to my son and daughter. Then he has written a will. Then the son and daughter is responsible. If he has not written, then it is eldest son or daughter or legal heir. So these people who are in a situation where assessee is not able to pay tax, their nearby people, nothing but these 4 people, are the deemed assessees. So these deemed assessees are liable to pay tax to the government. Next comes in the definitions. If we see, third definition is assessee in default. Assessee in default, though you know the word default means something to be done is not being done. So assessee is being in default, a person who has failed to fulfill statutory obligations as per Income Tax Act. As per Income Tax Act, they need to pay tax, is not paying taxes. First point. Second point is not filing his income tax return. Generally, as per Income Tax Act, if we see, here it is not there, but just for information I'm saying, for filing income tax return, who need to file their income tax return? Every person who is receiving income more than 2.5 lakhs in a year, they need to file their income tax return compulsory. 2.5 lakhs in a year. What is the 2.5 lakhs? Again, we need to go to the type of income there. If it is business, if their profit is exceeding more than 2.5 lakhs, if the profit is exceeding 2.5 lakhs, then they need to file their return. If it is salaried people, if their salary amount is exceeding 2.5 lakhs, they need to file the income tax return. For 2.5 lakhs is annual income, not monthly. So 2.5 lakhs divided by 12, if you see 20,830. So whoever are having salaries more than 20,830 rupees per month, they need to file their income tax return compulsorily. Then if you see sale of property, it is capital gain. In this capital gain, there will be 2 types, long term and short term. Short term capital gain, if it is exceeding 2.5 lakh, they need to file the return. Long term compulsory, they need to file. So based on the income, filing of return depends. That income slab which is exempted is 2.5 lakh. If you are having income below 2.5 lakh, you don't need to file the return. If you are having about 2.5 lakh, compulsory you need to file the return. Then not paying taxes. Who need to pay taxes? The person who are having income more than 5 lakhs need to pay taxes. For example, a person, Mr. C is there. He has joined in an MNC. His package is 6 lakh per month, 6 lakh per annum. Every year he is getting 6 lakh income. So 6 lakh, it will be 50,000 per month. So 6 lakh is his income. Since it is exceeding 5 lakh, he need to pay tax. He need to compulsory pay tax. For example, another example, Mr. D, he is having annual income of 4 lakhs. He need to file his IT return because it is exceeding 2.5 lakh, but he need not pay any tax since it is below 5 lakhs. So these are the 2 things. If a person who has not filed his IT or did not pay his tax, he will be called assessee in default. The income tax department will issue a notice to him to file the return and pay the taxes. So that is
Excuse me, sir.
Default. Yeah. Tell me.
What actually happens in IT return, sir?
Income tax return. Okay.
Yes, sir.
There also the same thing. I'll use the same slide. Income tax is basically majorly for 2 kinds of people who are doing business, who are doing salary. For example, business. You imagine a business, like for example, in your area, imagine a kirana shop. What that kirana shop does, every day he sells the goods which he has. Let us think every day he is having some 1,000 rupees sales, 1,000 rupees. This 1,000 rupees per month, it will be 30,000 sales. He is having 30,000. Sale he is doing, his expenses will also be there. He is selling for us, he is selling, for example, he is selling a 10 rupees dairy milk chocolate. That 10 rupees dairy milk chocolate, if he is selling to us, he will be buying it at 8 rupees. The 10 rupees chocolate, he will be buying at 8 rupees and he will be selling us at 10 rupees. 2 rupees profit. 2 rupees profit, you cannot directly tell 2 rupees also because the traveling will be there. It needs to come in auto, traveling charges. He will keep in fridge, electricity charges. So apart from purchases, other expenses also will be removed. Let us think it is all together 1 rupee. So he's buying that chocolate at 10 rupees. He's buying that chocolate at 8 rupees. All other expenses 1 rupee. 9 rupees is his total cost. 10 rupees is selling us. So 1 rupee is the profit. For selling that 1 rupee, on that 1 rupee, tax will be levied. That is for one chocolate. There are other items also. No, there will be 50, 60 different kinds of items. So on that total items, profit income tax return we need to file. What we will show in the income tax return is what you asked is, we will tell him that in my financial year, since it is filed for one financial year starts in April, ends in May. For example, running financial year is financial year 21-22. For that Kirana shop, we are filing 80. Imagine that we are filing income tax return for that Kirana shop. Now what we are doing is, we will ask him, what is your total sales from April 2020 to March 2021, 12 months. He will say, estimatedly, my sales will be per month 1 lakh. So for yearly 12 lakhs. So in IT return, we will show that his total sales is 12 lakhs. From that 12 lakhs, we will show purchases 10 lakhs, electricity bill 10,000, traveling charges 10,000. We will keep all the expenses in IT return. We will show sales minus expenditure, everything we will note down. Finally, profit is 2 lakh rupees. For that 2 lakh, since it is below 2.5, no tax. We will show as no tax is payable, and we will file the return. In IT return, we will show all the business which he does, practically what he is doing. In terms of numbers, we will show that. Sales and all kinds of expenses. There it will be there, electricity bill, all those headings will be there in IT return. We will enter amounts there. Only values we will enter. We won't write any texting and all, ABCDs and all, we don't write anything. Only numbers we write. How much is the sale figure, purchases figure we write, and file is IT, business. For salaried people, we will write, for example, there is Mr. G, he is receiving salary of 30,000 per month. 30,000 into 12, 3.6 lakh. 3.6 lakh is his package. Salary received, 3.6 lakh we will enter. And expenses, there are some deductions in income tax. After this profit, from this salary amount, we will be allowed some basic deductions like children's school fee, LIC, these will be allowed. From that 3.6 lakh, assuming that children's, Mr. G is there, he is earning 3.6 lakh income, 60,000 is his children's school fee. So minus 60,000, 3 lakh. On that 3 lakh, how much our tax is coming, we will pay that tax. So in income tax return, for salary people, we will show the salary details, how much we are earning salary, minus school fee deductions and all. Then the balance of tax is coming, for example, 5,000. 5,000 we need to pay online, and we need to update the challan details and submit. That is for salary people. For capital gains of people, for example, in that previous example we took, one of our relative, he purchased a land for 10 lakhs, sold it for 15 lakhs. There he will write sale value 15 lakhs, minus purchase value 10 lakhs, balance 5 lakhs. On that 5 lakhs, tax is coming this much. These values we will enter. There will be separate schedules. For business people, a separate ITR form will be there, ITR 4, ITR 3. For salaried people, it is ITR 1. For capital gains, we can use ITR 3. So out of the total 7 ITRs will be there. We utilize that 7 and fill the values in it. We'll mostly type only numbers. We don't write any words, because already all the words will be there, all these terminologies will be there in that. In respective columns, we will fill the values, calculate the tax, and file the return. Okay.
Yes, sir.
Okay. Next, assessing in default is done. Next comes assessment year. What is assessment year? Assessment year, before learning about assessment year, we need to check financial year. Present running financial year is nothing. It is also called previous year. Running financial year is also called previous year. Running financial year is financial year 21-22. So after this financial year is over, assessment will be done. After this financial year is over, for example, that Kirana shop, this financial year is done. Completely it is over. In next month when the IT forms is released, we will ask him how much is your turnover and all. So when we are asking him after the financial year is over, in the next financial year, which is financial year 22-23, in that financial year, we are asking about the previous financial year. The financial year in which we are asking him is called assessment year. We are doing assessment in that year. That's why it's called assessment. Assessment is nothing but evaluation. So we are doing evaluation, or we are doing assessment in the next year related to previous year. That is why it is called assessment year. Then next comes person. See, assessment year, previous year, these two, which we have said just now. Then comes person. Who is a person? Who is liable to pay tax? For example, you can ask, like in Income Tax Act, who are the people they are covered? because outside if we see there are different kinds of people doing business, like it will be an individual, some private limited will be there, some trusts will be there. So who are all covered? All those people who are covered, they are mentioned under the definition person. Who is a person? Person is these are the people who are covered under the definition of person. First one is individual. Individual is nothing but we all, natural human beings, all the public, all the regular human beings, people are there, no? These people are covered under the definition of individual. Then comes HUF. HUF is not very much famous now. Earlier it used to be there. Hindu undivided family who are doing business, all the family people, joint family, they were doing businesses. So there it is famous. Then it was famous. Now it's not being practically they are very very less. HUF, group of people doing together. Head of the family is called Karta. Members are called co-partners. That is, this HUF is also covered in the definition of person. AOP, association of persons. Some group of people with a common objective, they are coming together. Like you will see outside gated communities, then villas, these people, all those come under AOP. Then body of individuals. Here body of individuals, they come together to earn some income. For these you see in like in real estate, some group of people will come together, they will divide the land into ventures and they will sell it. So all those people will come in this body of individuals. Local authority is this we see outside, no? Police station, MPDO office, MRO office, everybody comes under the word local authority. Then partnership firm. Partnership firm is like, for example, two friends, they came together and then they want to start a business, they want to start a boutique. Those two friends together, they will form a partnership firm. If they wanted to do it big, they want to do it in higher level, they will go for a company, private limited company. In company we have definitions. Indian companies, which is incorporated under Companies Act. Foreign company is outside, it is incorporated in US or outside of India. Associate, statutory, subsidiary holding is, this is based on the shareholdings of the company. So if we see, the word person includes general public, individuals, HUF, association of persons, body of individuals, local authority, partnership firm, company, artificial judicial person. The final one, artificial judicial person, is like it is a corporation established under act of the government. It is, for example, if you see railways or airlines, if they are managed by the government, they will be formed under this artificial judicial person. Even universities, Usmania University, all these universities will be there, no? They are under either the state government or central government. So these people are covered under the word person. It is nothing but it includes almost everybody. Income tax, no, they want to collect tax, so they don't leave anybody. They will almost cover 99.99% of everybody. No one should escape. So it is nothing but it includes every kind of people who are doing business and earning some money. So next topic which we are going to is agriculture income. See, agriculture in India, if we see, like almost 60 to 70% of the people depend on agriculture. Still, in only in town cities we see people doing business, salary jobs and all. But when you go to the villages, you see most of them, 80-90% of the people will be doing agriculture only. And in India, if you see cities, towns will be not even 20 or 30% when compared to villages. Number of villages will be more, people living in villages will be more compared to the people living in city. So since agriculture is the major source of income for them, and in India, like everybody are not having some hundreds of acres and earning good income from agriculture and all. Everybody, most of the people will be having 1 or 2 acres or 3 acres, and that income from agriculture will also be less. It depends on season. So that is one point. And second point, food is the basic thing for everybody. Like whatever we are doing now, you like we practicing profession or business or salary or anybody are finally doing for basic living only finally. So these two reasons, for these two reasons, there will be almost no tax on agriculture income. So they need to define specifically what is agriculture income. Otherwise, what people will do, what is corporate people, like if they are very much cunning or something, they will do some processing work. They will, for example, in recent movies also you have seen cutting of trees and selling it. They will say like we are doing agriculture. So Income Tax Act specifically designed what is agriculture income, so that no tax can be levied on it. So if we see agriculture income, what is agriculture income is any revenue which is derived from agriculture land. There is an agricultural land. Imagine your villages where from where you came, the proper places. Their agricultural land is there. On that, some crop is grown, and that crop is sold in the markets. That is exempt. That income which you receive from the agriculture is exempt. Then types of agriculture income. Income Tax Act is defining that types of agriculture income. Rent or revenue derived from agricultural land. So there you have some 5 acres of land in your village. You give that land to someone. You're not able to take care of the agricultural land. You give to land someone to grow crops. Nothing but we in local language we call it as kavulu. We give land to kavulu so that they will produce. So that kind of rent or revenue derived is also exempt. There is no tax on it. And any kind of agriculture operations you do, like you put a tractor and do the agriculture, some operations on that, that is also exempt. Then farmhouses will be there, no? Like farmhouses to store the agriculture produce or building attached to agricultural land. We cannot say you are having a building there, some revenue you are earning from that building, renting of building, so we will tax. No, there is no tax. That building is constructed to store agriculture. It is for the purpose of agriculture, so there should be no tax on it. Agriculture income in that definition, this is clearly mentioned. Under what section it is mentioned, Bolito? It is under section 10(1). Agriculture income is given as exemption. And they have also said about two things: basic operations and subsequent operations. Basic operations are compulsory necessary. For example, if you want to grow some paddy or rice, then you need to water it first. You need to plow. All those comes under basic. Subsequent operations is after producing, you will do operations to that. Those comes under subsequent operations. So, like for example, you need to store it. You need to remove the dust and all. Those comes under subsequent operations. So these both are exempt. That is agriculture income. Finally, what summary point is on agriculture income? Whatever kind of operation which you see in villages. In villages, you see, different. All the people will be producing different kinds of vegetables, and they'll be selling in market. All those are exempt. Even if a company does agriculture through farmers by establishing farmers, then also it is exempt, provided they register themselves under producer companies and all. So finally, all the agriculture income which you see in India, they are exempt. Next, after agriculture income, we are going for heads of income. In heads of income, already 3 we have done previously. Here we have seen 3 types: business, salary, capital gain. Yeah, so salary is this, business, capital gain. But we'll check once again. Income from salary. Salary can be any kind of salary. It can be from a person working in MNC or a local shop or in Indian government, politicians. Everybody will come under salary. Income from house property. This we have not discussed. Income from house property is for example, Mr. A is there. He is having 2 buildings in Hyderabad. Each building he will get rent of 1 lakh rupees. So totally 2 lakh rupees. That 2 lakh rupees, from that 2 lakh, 30% will be reduced. Income Tax Act has defined exclusively 30% will be reduced from the house property. Why that 30% is given is because there'll be some repairs or any kind of expenditure to the houses by the owner. He might be doing paints, or he might be paying some taxes, or he might be doing some internal repairs and all. For all those regular expenses, income tax has given 30%. So from 1 lakh, you can remove 30%. On only 70,000 you need to pay for one house. On balance 70,000. Total 1,40,000. So on that 1,40,000, income tax is to be paid. So that tax which is paid on the rent derived from house property is income from house property. Tax is paid on income from house property. Then profits on gains from business or profession. We have taken that Kirana shop example, that profits and gains from business or profession. Business is which you see outside, all kinds of on the roads you see, all kinds of shops or companies, everything. Profession is this doctors, lawyers, CAs who are doing their profession, consultants, everybody will come under this. Then capital gains, we have seen relative selling his land, 15 lakhs minus 10 lakhs, 5 lakhs on that 5 lakhs. That 5 lakhs is capital gain. Tax is to be paid on that 5 lakhs. Then income from other source. What is income from other source? Income from other source is, for example, in bank, your parents has invested some 10 lakhs, made an 10 lakhs FD on your name in bank. On that 10 lakh, interest every month, interest you are receiving. For example, 1% you are receiving on 10 lakhs. 1,000 rupees or 10,000 rupees you are receiving every month as interest in your bank account. That 10,000 comes under other sources. Then commission income. Then any type of income which is not falling under this 1, 2, 3, 4 salary or income from house property or PGBP or capital gains, it comes under this other source. So these are the basic heads of income. Total 5 types of income: salary, house property, PGBP, profits or gains from business or profession, capital gains, then income from other source. What is income from other source? They have given some specific things like interest, commission and all, and any other income which is not falling under these above 4 comes under income from other source. Next, we are going for computation of total income. See, for example, there is a person, imagine some your local neighbor, Mr. G, is having his daily is going to he's going to job. There he is getting some 50,000 per month. He's having salary income. Then he's having a house property. He's having a house property in a nearby area. From that, he's getting rent of 50,000. Salary every month 50,000 is getting, and from house property every month 50,000 is getting. There is no imagine we'll imagine he's not having any business. He's not having any capital gains. He's having some 1 crore fixed deposit in bank. On that 1 crore, every month he's receiving 50,000 as interest. So every month he's getting 50,000 salary, 50,000 rents, 50,000 interest. So 50, 50, 50. 1,50,000 per month is getting. 1,50,000 is for 1 month. For one finance year, there are 12 months. So 1,50,000 into 12 months. It will be 18 lakhs. 1,50,000 into 12. So on that 18, he need to pay tax according to the slab rates. After that 80, from 18 lakhs, there will be some deductions, like deductions from gross total income will be school fee, LIC, etc. For example, from that 18 lakhs, there is his school fee. His children are going to school, both school or college, anything. They are going to college, for example. There he's paying 1 lakh college fee. So from that 18 lakh, he can reduce 1 lakh. And from LIC, he's paying 50,000. So 18,000 minus 1 lakh school fee minus LIC 50,000, 16.5 lakh. So 16.5 lakh is his total income. From the total income, this school fee, LIC, there are some other deductions also. After allowing the deductions, total income will be calculated. And that total income, tax will be levied. If he is an individual, then slab rates will apply. If it is a partnership firm, 30%. If it is a private limited company, 25. For private limited also, earlier it was 30. From last 2 years, they made it 25 to encourage private limited companies in corporation. So all kinds of income which a person is having, they will be clubbed together accordingly, and deductions will be provided. Then total income will be arrived. On this total income, tax will be levied. So this is how a income is computed together and tax is levied. Then after that, we are going for exempted income. Exempted income, if we see, then you may ask, agriculture income, you have said there is an exemption. Are there any such kinds where exemption is provided? other than agriculture income. Exemption is only to agriculture income, or are there any? There are few other exemptions also. Income tax is not levied. Income tax department will not touch these exempted incomes. In this, there are two kinds: fully exempted, partial. Fully exempted is complete exempt. The first one is agriculture income. We have already seen how agriculture income is exempt. Then interest on NRE account. NRE account is a person he has left India, and he is getting some income from India. He wants to store that amount in a bank account. Since he's going out of India, normal savings accounts and all is not preferable. They will open NRE accounts, non-resident external account. That accounts, if that income which they're earning from out of the country, he went there and is doing job, and he wants to send that money to India, and he wants to store that amount in our Indian rupees. That kind of accounts are called NRE accounts. In that, foreign income can be stored in Indian rupees. That on that income, interest, if any, is regular generated, that is exempt. Then comes who are not citizens of India. Like for example, if you see even US or UK, they'll be having embassies in India. Like from their countries, representatives will be there in India. Even for Pakistan, embassies also will be there in India. Whichever the country is out of India, they will have their representatives in India to maintain their relationship with India. So such embassy people who are earning income, their countries only will pay their income, but it will come to their Indian the accounts which they are maintaining in India. That incomes are exempt. Then share income of a partner. This is exempt because in partnership firm, if there are two partners, partnership firm will already pay tax. So again, they won't collect tax here. There are such exemptions. The income tax paid by the employer. If your company is paying tax on behalf of you, they won't tax you again. Then MPs, MLAs, accounting on account of disaster. So there are such exemptions which are given complete exemption by the Income Tax Act itself. See, last point, if you can see, educational scholarships or awards by government. If students receive any scholarships from the government or any awards, those incomes also will be exempt. Then family pension received by children of armed forces. There are these kind of exemptions will be given to such situations where tax is to not be collected. If we collect tax from them, there will be basic injustice done to them. So in that cases, complete exemption is provided. This is fully exempted cases. Next comes partially exempted cases. Partially exempted bole to, like for example, leave travel concession. This is for salary people. A person is working in a company. There he wants to go out. He wants to go out for a tour with his family. That company is giving some amount for his traveling expenses. So for traveling expenses, the company has given 1 lakh. That 1 lakh, out of that 1 lakh amount, since the company gave him, should that 1 lakh be taxed or not? Bolito, there are some limitations given. For it will be like this: up to 50,000 it is exempt, above 50 it is taxable. Partial exemption. Exemption will be there, but partially, because company gave him 1 lakh, he will spend that 1 lakh completely in tour, traveling and all. Then from where he will pay taxes. So some partial exemption is provided to them. Then computation of pension, retrenchment compensation, receipts from LIC. LIC will be there, no? After death of a person, it is received. House rent allowance. These kind of. I will share you this PPT. You can go through. There are these categories where exemption will be there, but not fully. It will be around 40-50% of the amount. These are partially exempted income. Next comes residential status. Residential status, like we have seen above, definitions of individual HUF, firm, AOP, all this we have seen. In that again, individual HUF also, let us take an example. One of your cousin is there. Your cousin, he has stayed in India for some time. In this financial year, he has stayed in India for 180 days. After that, he left to US. He went for studies, higher studies, MS. He's doing their MS. So will he become a resident here or in US? Because taxation in income tax will be based on residence. For example, your cousin, he has went there and last year completely he was there only. He was not here. If he is completely there in India, you cannot tax him. He's not in India only. So for that purpose, the definitions are defined based on the residential status. How much time he's being in India. In that, if you see, it will be for individual, it is resident, deemed resident, non-resident. In resident, two categories will be there: resident and ordinary resident. Is like it depends on number of days you are staying. More than first, we need to see this for residents and all. There are two definitions. There are two conditions which we need to satisfy. Basic condition, additional condition. Basic condition is more than 180 days. 180 it will be 6 months, half an year. If he is staying in India. No, he did not stay 180 days. He stayed only for 100 days. Then go for second point and see. Did he stay 60 days in India? Yes. And did he stay 365 days in last 4 years? If any one of these condition is satisfied, then first basic condition is done. It's okay. Next to go for additional conditions. Resident for last 2 out of 10 years in preceding previous year. You check last 10 years. In that last 10 years, did he stay at least for 2 years? Then yes, he stayed. Plus, he has been in India for 730 days during last 7 years. Last 7 years, did he stay in India for 730 days? If these two conditions are satisfied, he is satisfying additional conditions also. So basic conditions, these two. Additional conditions, these two. Basing on this basic and additional conditions, residential status will be decided. How? For example, in this resident, if you see resident and ordinary resident but not resident, these two are there. No, who is a resident? Ordinary resident means he must satisfy at least one of the basic condition and both additional conditions. He will become a resident or ordinary resident. Then second one, resident but not ordinary resident. Who is that person? Resident but ordinary resident means he must satisfy at least one of the basic condition and he is not satisfying any of the additional condition. He is a resident but not ordinary resident. Then non-resident. Non-resident is a person who is not satisfying any conditions. Like for example, there is a person Charlie in US. He is a non-resident because he won't satisfy any of this. He's not staying in India at all. He's born and brought up in US. Then he will become a non-resident. So non-resident person, we will come here. Firm, AOP, authority, company. In this case also, resident will be there, non-resident will be there. On this person, how it will be defined means for individual we can say he's staying in India, he's staying out of country. But for a company or a firm, how can you say he's staying in India, he's not staying in India? We cannot say. So there it is decided like where it is incorporated. Did you incorporate in India? Then you are resident. If you have done it out of country, then you will become non-resident. So that is the resident and non-resident definitions. Then scope of the taxation, if you see resident and ordinary resident, global income is also taxable. One of our person, he is having some house rent property, house rent income in India, and he went out of the country, staying there only completely. So if he falls under this resident and ordinary resident limit, global income in US he is doing job. That job ka salary amount is also taxable in India. Then resident but not ordinary resident is if that for this person income which is received or deemed to be received, accrued or deemed to be accrued arises in India, which is if he is receiving that income in India only, it is taxable. Then income which is accruing outside India, if he is having any control from India, it is taxable. Otherwise, it is not taxable. For I'll tell you an example: resident, not ordinary resident person. He is only if he is receiving in India that income it is taxable. First point. Second point: if he is receiving any income, is doing job in out of the country, US, there that income is not taxable. But if he is doing that job from India, like work from home or such kind, then it will be taxable here only. But after the taxation also they will give exemption because he cannot pay the tax on US and here. If he's getting some 10 lakhs amount as salary, there he will pay tax, here he will pay tax. 2 times he will pay tax. So to avoid that, exemption will be there in either of the countries. DTAA will be there, double taxation avoidance agreement. As per that, exemption will be provided in either US or here. Then non-resident. Non-resident only if, for example, Charlie is in US, he has bought some house property in India. Every month 1 lakh rent he is getting. So on that 1 lakh his rent it is taxable because the house property is located in India and rent also you are getting in India. So out of country person, if any foreigner is having income from India and earning income in India, on that income is taxable. Whatever other income is getting from out of the country, it is not taxable. That is for non-resident. Then types of income, if we see, we have already seen basic heads. Already we have seen capital gain, salary, employee benefits, passive income, wages. Other than these four, we have discussed these four types of income. No. Heads of income. Salary, house property, PGBP, capital gains. Other than these four, all others will come in income from other source. So other than these four, whatever you see here, dividend, royalties, everything will come under income from other source, except capital gain, salary, business income, and capital gain. Except those four, every other income will come under income from other source. Even though these many are there, no, out of this, all these headings, most of them, 90% of them will come under income from other source. So these are the topics. Finally, what is the thing is, income tax is levied on the profit, the final amount which is left with the public after all the expenditure. On that, income tax is to be paid. Why it is to be paid? It is to be paid to run the government. Why the government is to run? Government is to run to protect us from outside forces and disputes between the public for road infrastructure and all kind of general welfare activities. Government need to do. Government need to do means government needs money. Government needs the money means public should pay the taxes. So finally, income tax is contributing to the welfare of the nation. Whoever are paying tax, they are contributing to the welfare of the nation. So that is the session. Thank you.
Thank you, sir.
Yeah.
Thank you, sir, for the excellent, clear, and orient presentation. Usually, it
Welcome.
is, sir, income tax is the hardest thing to understand. But, sir,
Okay.
with your explanation, you have made it a simplified and understandable to the students, sir. And thank you very much, sir, once again.
Thank you. Thank you. Yeah.
I request Assistant Professor Kavita from Department of Commerce to give the vote of thanks.
Thank you, ma'am. Good afternoon to one and all. It gives me an immense pleasure to deliver the vote of thanks for this webinar on Introduction to the Income Tax. I, B. Kavita, on behalf of the Kasturba Gandhi and Degree and PG College for Women, Department of Commerce, would like to thank our speaker, Mr. Sharad Pawan, for sharing his valuable inputs on basic concepts of income tax, and also making the webinar very interactive and interesting. Thank you very much, sir, for imparting your knowledge with us. This is really needful session, and I'm sure this will definitely help our students in their future endeavors. It will, I also thank Principal Ma'am, Dr. P. Sunita Ma'am, and Vice Principal and Head Department of Commerce, Dr. R. Rashti Ma'am, for giving us an opportunity to conduct the webinar. Thank you, ma'ams, for your guidance and support. I would also like to thank convener and coordinator, Ms. Sushma Ma'am, for encouraging us to conduct the webinar. And I also thank my entire Department of Commerce for their cooperation and support. And I would also like to extend my sincere thanks to ICT team for their support in smooth conduct of the webinar. Last but not the least, I thank my dear students for their active participation in the webinar. With this, we move to an end of the session. Thank you all. And now, I request the students kindly fill the questionnaire, for which the link is shared in the chat box to get your e-certificates.
Students, there will not be any e-certificate, only a small test come feedback form will be shared with you, Google form. Fill that form and submit it.